Now let's look at some company results. Financial Services Group FirstRand is the latest to report lower profits and higher bad debts as a result of COVID-19 and the lockdown. FirstRand, of course, the parent company of FNB, Rand Merchant Bank and Westbank. Headline earnings per share, the main measure of profit in this country, fell by 38% for the year that ended in June, and impairment charges doubled to 24 billion or so. Well, the results of the banking sector as a whole have shown how difficult South Africans, many of them, found it in the lockdown to repay their loans. ABSA earlier reporting a decline of 82% in headline earnings, Nedbank 69%. So you can get the picture. Capitec warning of above 80 as well. First National Bank, now FNB, says its results show that operating performance was still resilient despite the very tough economic situation. To discuss, we're joined by FNB CEO Jacques Celliers. So, Jacques, thank you for being with us. And of course, we saw that contraction in GDP, 50% on an annualized basis, 51, some prefer the 16% figure. But what did that whopping decline sort of towards the end of your financial year mean for FNB?
Yeah, thanks for the opportunity, Francis. Yeah, so it was two halves. I mean, the first half of the year was already challenging as the economy was slowing down at a hell of a pace. And then we had, in the second half, on top of that, normal slowdown, the COVID impact, both financially and obviously health-wise, affecting people greatly. We ended up the year with quite a respectable set of results, and in those results are quite proud of amount of relief and help we would give our customers through the last quarter to get them to the other side of the lockdown as the economies are opening up now again, and also as how we kept our systems and the technology and infrastructure going under the essential services mandate. When you look at our provisions for the future, it's pleasing to see that there is no blowout in any of our books at the moment. These are all provisions that we've made for future very conservative outlook on the market. You're right, the economy, given the GDP numbers that come out, they're not pretty. But pleasingly, if you look at our set of results, we did also share some information. At the moment, it looks as though our customers certainly are starting to see income levels back to 90-95% of where they were before lockdown. And transactional activities have also come back to 90-95% of where they were before lockdown. So pleasingly, it does look as though there is some activity coming back into the economy.
And you talk about green shoots, and that's good that people's income is recovering. But can you respond, Jacques, to what Moody's had to say yesterday, looking at the decline in GDP? The credit rating agency said the shock will trigger a deterioration in asset quality that will erode the buffers of South African banks, which were strong pre-crisis. That suggests there's still a real threat to the banks. Your response?
Yeah, look, I mean, fortunately, at our institutional level, we are very well capitalized. Our balance sheets are very strong, and we've deliberately set out this agenda to make sure that we come out on the other side with a very strong banking sector at an industry level as well as us ourselves. There's a big appreciation, actually, a realization that certainly as a taxpayer, there's no obligation on any taxpayer to bail out the banks in our local market, as has been the example in many of other countries which went through cycles. Yeah, in South Africa, we have to support some of the state-owned entities, and certainly as a taxpayer, that's quite a burden. But we feel that we're well positioned, and our balance sheets are strong enough. We also said, for example, we could have paid a dividend and not been for the regulator request that we do not do so at this stage, and so we're well positioned. But you're right. I mean, the market is challenged. There are two positive things that we've looked at. The one is that certainly the low interest rates seem to be supporting participation in the property sector, and clearly that asset value is a big underpin for many people and for most activity. So the property prices seem to be holding out nicely at the moment, and then also vehicle prices are holding up fairly good as people are reconfiguring maybe from public transport to their own transport, or sort of reconfiguring, downscaling. So there's some activity that is positive, but it's by no means stable. It's going to take some time for us to get to some normality that we can really start predicting the future on.
All right, so no systemic threat at all in your mind. Jacques, before we run out of time, it was interesting that you said the increased adoption of digital platforms helped FNB. I mean, so were you actually in a better position because of the pain in years gone by, closing down branches, moving customers online? And were there any interesting trends in lockdown in terms of, I guess, just more online activity?
Yeah, plus, I mean, there are 3-4 big key points to our strategy, which, it's incredible how they land out and perfectly positioned for the times we live in. So one was our core banking relationship strategy, that we could have, deep data insights on transactional activity. We can spot 2 restaurants next to each other. One is open for trade and the other one isn't. And we can, because of the activity in the accounts, we can help where we can on both of those fronts. That's the one element of our strategy that has really stood us well in this time. The second one is this whole move into the digital platform futures that we've been at for a multi-decade journey now. And it's unbelievably exciting to see how the adoption has increased, how we were able to provide relief on these platforms, both at an insurance level, massive impacts at simplifying customers' experiences, at dealing with complexity and load. In the old days, we would give phone call numbers and email addresses and standing queues to get help. We could do so overnight on our platforms and personalize, offers to customer level. So it has been really, really impressive to see the digital penetration work out for us, and we're very well positioned for what the market needs now going forward. Another very interesting stat was our e-wallet activity, which grew 30% as people used that tool to distribute money to where they needed to help, what they used to traditionally rely on cash on. So we're very excited about all of our platform executions.
All right. Thank you very much. We have to leave it there. We appreciate your time tonight. That was the CEO of FNB, Jacques Celliers.